modest start to the Asian indices as well, but they've opened higher compared to what we are seeing on the US futures currently. It's a mixed picture that is emerging as of now.
The Nifty's also, by the way, crept back into the positive territory on a year-to-date basis. We're up about 1.7% or so.
I think the Nifty Bank again holds the key because it's seen some bit of cool off from that 56,000 odd mark. And if the bulls need to fight back, this one will have to find its form.
Reliance Industries has clocked in a very strong, steady and a good performance. The key positive was acceleration for Reliance Retail.
24,088 on the Nifty, about 0.12, 0.1%, so nothing on it at all. The Nifty Bank is, again, got nothing on it, 54,624 or so.
At Kotak, we're penciling in about 12% earnings growth in FY26, followed by another 14% in FY27.
We expect our OPEX to further moderate next year. Our OPEX growth last year was only 16%.
We're playing in a very significant way in multiple segments.
Benchmark indices holding with a gain of nearly 1% at 11 o'clock. The Nifty is closer to 24,250. Reliance Industries 4% up move.
People at the entry-level segment have numerous demands on their income.
Navy carried out successful multiple anti-ship missile firings in the Arabian Sea as well.
Surge on the Nifty, 1,000-point surge on the sensex. The bulls are making a comeback, and how?
That was the day so far. Hello and welcome to Closing Bell, last hour of what's been a super strong Monday's trading action. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Nigel D'Souza, and the Nifty is holding firmly above the 24,300 mark. And it picked up pace in the second half of the trading session. As we speak, benchmark indices up over 1%. Mid-caps, small caps higher. Mid-cap index is up 1.2%. That said, for a 1.2% kind of a rally, the advanced decline ratio is not that strong. It's pretty much even keel. But, Reliance Industries is clearly the star stock of the day. Reliance Industries is up more than 5%, and it's crossed the 200-day moving average. So that's a positive. And with the up move, we've pretty much recovered all that we lost in Friday's trading session. On Friday, we were down 200. Today, we're up close to about 300 odd points. The only thing is we've not managed to surpass Friday's intraday high, which is 24,365. So that would be a level to watch just in the near term.
And that's something that the Nifty Bank has managed. The Nifty Bank's high today is higher than what we saw on Friday. And the Nifty Bank is the one, where the RSI had perked up and that had gotten to an overbought zone. So at the start of today, we had mentioned that the RSI has cooled back down to around that 67 odd mark. And that's the one that's leading the way. So if you pull up a contribution chart, you'll see Reliance Industries and the banking names, they're accounting for almost all of the gains that we're seeing in today's trading action. And though you have the breadth of the market, that's pretty much even Stevens, you have many outsized result reactions that we're seeing in today's trade. So you pull up a couple of names. You have RBL Bank, that's up close to 10%. On the flip side, you look at L&T Finance Holdings, that stock's down close to around 5%. And I think the stock of the last half an hour or so is KPIT Technologies. The street was waiting by for guidance. The guidance has not come about, though you need to keep in mind that the commentary is fairly positive. But what happened in the last, in the last 30 minutes or so is we saw a sharp spike up on the stock because of the commentary that did come in. But I think the street was looking forward to some kind of concrete guidance, which hasn't come, which explains why the stock has slipped from the highs.
Yeah, we'll talk more about, KPIT Tech. That said, Q4 was strong, but no guidance, which basically means that the situation is very fluid, very uncertain, which is why the company can't go out there and, give it in terms of numerical guidance. But, growth rates for KPIT have also fallen. The time when it used to command a very high PE was when growth rates were 30-35%. Last year, growth rate came down to about 18.5%, roughly. So last year also a lot of de-rating happened because a year back, the stock was priced for growth rates of 30% plus. It came down to about 18.5%. And now we'll have to see what the company does this year. There's a conference call at 5:30 p.m. So we'll get clarity on that. But for now, the key headline is that the company hasn't given you a revenue or a margin guidance. But, we'll get in our experts to weigh in on this. For now, let's go across to Mitesh Thakkar to find out a few last hour trades. Mitesh.
Good afternoon. So I think, the market, as we were hoping and, anticipating that it could bounce back, possibly move towards the upper end of the range, which is 24, 550, and we're not very far away from there, roughly about 200 points to go. So the overall tone remains positive, except for the fact that in the extreme short term, there still could be some kind of consolidation, which could see the markets taper off a little bit, just be in range for some time. But the bias is on the positive, and I eventually expect the Nifty to break on the upside, which is beyond 24,500, 550 and head towards 24,750, 800. Having said that, on the stock side, I have a buy on Tata Motors with a stop at 652 for targets of around 700. And the other one which I like, that's Torrent Pharma, which I would recommend buying with a stop at 3280 for targets of 3450.
Okay, Torrent Pharma. It's the pharma sector which has done very well today. The Nifty Pharma Index is up nearly about 2%. But top honors go to Reliance Industries because that giant has woken up and is ready to fire. Reliance Industries is up 5%. It's crossed its 200-day moving average. But also bear in mind, in the last 3 years, Reliance Industries did practically nothing. The stock price hasn't moved in 3 years.
Yes.
Just comparing it. So there is a little bit of a catch-up. And now the numbers are very strong. So in the current quarter, profits are up 5%, revenues went up 10%. The key positive was Reliance Retail, because Reliance Retail's growth was struggling. But in this quarter, they've come back with a 16% top-line growth, EBITDA growth of 14-15%. And to put it in context, for instance, in Q3, Reliance Retail top-line growth was only 7%. In Q2, it was negative growth. And that's when the street started getting worried about retail. But there is acceleration seen in that. And you know what Axis said? That the fact that they're managing to do it while, they're managing to grow in the current quarter, while optimizing their network, while making those investments in FMCG and so many other verticals, it just shows that the platform is now very mature and it's pretty much at an inflection point, according to some analysts. O2C was subdued, better than expectations. Jio clocked in a steady quarter, and new energy plans for Reliance Industries are also unfolding, and that has got the street excited. There you have, they've commissioned a gigawatt scale solar module plant. Brokerages are bullish. Nomura says top pick in the energy sector. JP Morgan, Morgan Stanley, overweight. And it's also the first Indian company to have hit a net worth of more than 10 lakh crore rupees. So that is a milestone worth reporting when it comes to Reliance Industries. We'll get the disclaimer up for you on your screen for Reliance. But in the meanwhile, let's also get in Dipan Mehta. He's joining us on the show now. Dipan, Reliance Industries, time to buy?
Nima, good afternoon, and thank you for having me on your show. Yeah, I think numbers were exceptionally good. I went through it in quite a lot of detail and very impressed with Jio numbers as well and with Reliance Retail. But the issue is that you are still buying 3 businesses in a single share. And if you're positive on one particular business, you can't buy into that specific business as an Indian shareholder. And that's where the problem is that, unless you don't have clarity on how the business is going to be listed separately, I'm not sure you want to buy the entire holding company per se. For example, I think Jio's numbers were exceptionally good, and it does show that telecom sector is doing very well. So if you want to increase exposure to telecom, you don't want to do it through Reliance, maybe you can better do it through Bharti. So that's the dilemma which investors are in. The same is with retail, and we saw numbers came from DMart as well, and I'm sure other retail companies also will come with good set of numbers. So that's what is happening, that if an investor wants to play a particular investment theme, or he is bullish on one particular sector, then that's not being offered by Reliance in its present form. At some point of time, we have been talking for several quarters that there has to be some clarity on the structure, on the listing. And if Reliance were to become a holding company, then the holding company discounts also will come into play. So while I think it's great from a Nifty perspective that the largest company has reported such great numbers, but when you look at individually, when you want to buy Reliance in a portfolio, sure, you will buy it because you want to track the Nifty. But whether you'll be overweight, I'm not so sure.
Okay, all right. Well, hi, Dipan. Good afternoon and good to see you, Ben. We had a news flash at the bottom of your screen that the long-awaited India and France, they have signed a mega 63,000 deal to buy 26 Rafale marine aircrafts, for the Indian Navy. So that's the big news point that was just flashed at the bottom of your screen. And you have the defense names itself that are moving higher in today's trading session. Any particular stock that's on your radar, Dipan? You have Bharat Dynamics that's up. HAL is buzzing in trade as well. One of the possible beneficiaries of this particular deal, between India and France could be Reliance Infra as well. But they will be doing the maintenance contractor work. That's in the years to come. Anything that stands out for you?
See, not specifically related to the Rafale deal, but definitely I think Hindustan Aeronautics is certainly a stock. Again, disclosure, we and our clients are invested. And the reason for that is that the G engines, as in when they start coming in, you will see a lot of improvement in the billing and the execution at HAL. And it's a large company. And I think order visibility also is quite phenomenal and critical to India's strategy to be self-dependent on defense. So very positive on that company per se. It has underperformed for some time now, but I think because of whatever's taken place in recent time, again the defense stocks have come into focus, and understanding that these companies are critical to our security. I think they may see even more importance being given by the government, maybe more order flow, maybe more operational freedom. I don't know, but on the whole, I think it does put a spotlight on defense companies. But our top pick would be Hindustan Aeronautics. But investors need to hold these stocks for a long period of time because the billing cycles, the order cycles are very long.
Got it. Okay, all right, Dipan. Let's focus on the banking names then. RBL Bank, that's passing in trade. It's up close to 10%. Citi is bullish on the stock with a buy rating, whereas JP Morgan is bearish on the stock. They have an underweight rating. Abhishek joins us to get us all of these details. Well, Abhishek, I don't remember the last time around RBL Bank was up 10%. Tell us more.
Well, it looks like, in the con call, they have guided that the worst is behind, which is a common phrase used across various banks at many quarters. So Citi has actually a buy view, and they have increased the target price to 230 from 215 that they had earlier. They said that the stress in the MFI portfolio, that is the joint liability group model, and the credit card portfolio has actually subsided in Q4. So slippages at 4.7%, that is the annualized slippage ratio, has actually surprised them positively. They expect the slippages and the credit cost to improve meaningfully going ahead. So they see visible stabilization and anticipation of normalization with respect to slippages and credit cost in H2 FY26. So growth to be led by retail and secured portfolio as well as commercial banking. So valuation at 0.6 times price to book value on a one-year forward basis appears to be inexpensive. Now we also have JP Morgan. They have an underweight rating, target price of 140 per share on RBL Bank. They say that the headline profit after tax was well below their estimate by 9% miss on their pre-provision operating profit. So that is operating profit before provisions. Credit cost could reduce in FY26. Valuations appear fair, but they think that there will be sharp improvement in return ratios, which may take some time. So they are still not, confident with respect to return ratios of the bank to improve in the coming quarters. CET1 ratio is at 12.8 to 13%. This can be interpreted that they can expect capital raising by RBL Bank, going ahead. So they expect the stock to remain range bound at lower levels. Back to you.
Thank you. Sorry.
All right. Thanks a lot for that, Abhishek. Well, Deepan, what do you think? As Abhishek says, the management believes the worst is over. But as Abhishek also reiterated, it's been a common phase. What do you think? You're going with Citi?
Nigel, no doubt it is a cheap stock. But look, it's lost market share and growth certainly has been subpar compared to its peer group. It has had its share of problems with NPAs, uncertainty around management, and now seems to be like a great turnaround candidate. So yes, I think investors looking for increasing their exposure to banks and BFCs can consider RBL Bank, because from this point on, I think a lot of the bad news is in the price. And something which is very positive is that earnings also may start to grow. And because of uncertainties being done with, you may expect the P multiple or the price to book also start to look up. But there's one key factor that I should look out for in RBL Bank before you go a bit more aggressive, and that is how is their loan growth shaping up? Have they got the confidence and the systems and the risk management policies in place to grow the loan book, which had been lagging for so long? And second, of course, is typically the CASA ratio, which will help us understand what the confidence of the depositors is there in the company. So you can certainly look at the stock in positive light, but the real conviction will come when you see the growth rates going back to higher than industry averages.
Got that. That is RBL Bank for you. Dipan, KPIT Tech, would you be worried? I mean, it's no surprise that companies are refraining from giving a guidance and then having to change it. No one knows how this situation will play out. It's so fluid. But if you're an investor in KPIT Tech, how would you view this no guidance?
No, I think it is disappointing, no doubt about it. And all these companies like KPITF and Tata Elxsi to an extent are feeling the indirect pressure of competition from Chinese EVs. And when this can change, we can't really say. And then, sorry, the companies that they are, the customers, they're going to get impacted maximum by US tariff policies as well. So with this kind of uncertainty, and anyway, the view on software is a bit negative, I would still say that these are good levels to kind of lighten up on KPIT Tech. No doubt a great company, fabulous track record, but it's in for some bumps going forward. And as investors, I typically say, and people a lot of kind of, don't like it, but investors are in a way fair weather friends. And the minute you see that there is some disturbance happening, you want to reallocate your portfolio. That's the sad truth. And, I think something similar can play out in KPIT also. And I'd like to be a bit underweight in the stock.
What about Tejas Networks, Deepan? The stock had a one-way run and it's come down as well by the elevator. Sharp fall is what we're seeing. The problem in last quarter's numbers was there were a couple of one-offs in the operational performance, but the bigger problem is the order book. That's come down dramatically. However, there is a hope that maybe, in fact, there could be a big order in the offing, but that's been the case for the last couple of weeks. How would you view the stock at around 750?
Sorry, I didn't get the
Tejas Networks.
Oh, Tejas Networks. Oh, yes. It's another company which is there on our watch list. Highly, highly volatile earnings, I would say, not just in execution, but also in when and the quantum of PLI benefits as they are booking. So I think that you keep it on your radar, look for some positive news, look for stability, execution picking up, and then maybe look at the stock more positively. But look, I think investments in all these kind of telecom networks is certainly going to improve. They haven't scratched the surface when it comes to exports as well. But the absolute dependency on government projects and related high level of debtors and all is a concern. So it's like a, kind of a mixed picture at this point of time. So it's on our watch list. I don't think I'm looking at buying it or would advise investors buying to the stock.
That is, Tejas Networks for you. The company reported a loss this time. I think some of that BSNL deal that they were executing is also running off.
Yeah.
So till they get another BharatNet kind of, tender which comes to them, you are seeing that, order book also slowly start tapering off when it comes to Tejas Network. But the stock today has taken a big, big knock. Deepan, before we let you go, the big deal of the day, M&M and SML Isuzu. M&M seems to have got a very good deal. Stock is up. But SML Isuzu, after the kind of run-up, is now backtracking a bit.
No, I read the news and I was quite delighted because as a disclosure, we have investments in M&M for our clients as well. I think it's a great fit. And this is one business which in a way had been lagging. When you think of M&M, you think about the auto, the UV business, the EV business, and the tractors. You never think about the basic commercial vehicle business. But this is a great fit. And it fills a nice void which is there in the product offering. So very positive on this development. It may not make a material difference in terms of profitability considering the size of M&M, but look, it's earnings accretive, and over a period of time, they will grow the market share. Look at M&M's track record when it has come to acquiring the tractor companies. They have acquired 2-3 tractor companies for the last several years or so, and they all have worked out very well for M&M. So I think they have a great track record in acquisition, at least domestic acquisition. The foreign ones haven't done well. Domestic acquisitions have worked out very well and eventually add a lot of shareholder value. So very positive on M&M and very happy with the deal that's taking place.
Okay, all right, Deepan, we'll let you go at that. Thanks a lot for joining in and, in fact, filling us in with your take on all of those stocks that we discussed. By the way, just keep an eye out on Bajaj Finserv. The stock in the last few minutes has suddenly slipped to the low of the day. So I think it makes sense to get up Bajaj Finserv, the stock, that's the way from the top. It's seen a little bit of a downtake. And I think the other index that slipped is the IT index. Just pull up the intraday chart out there because I'm looking at charts of, TCS, Infosys. Both of them have come down. And I think you could see a bit of a downtick that we're seeing on the IT index from the high point of the day. The Nifty Bank is still holding with 650-point gain, but the IT index has slipped into the red. Slip into that short break, come back. We'll get chatting with Nikhil Ranka of Nuvama Asset Management. Stay with us. Welcome back. Well, let's focus on, before we get to the chat actually with Mr. Ranka, let's just focus on a couple of names actually. Quest Corp is now down close to on 4%. So that stock, in fact, has slipped. And KPIT, actually, the street is still split with regard to what they've seen from the company. Because the stock did go down to around 1,200 rupees. Now, quickly, it's bounced back. So it's a fairly volatile screen that we're seeing out there. But as promised, let's get a Nikhil Ranka, CIO Equity Alternatives at Nuvama Asset Management, who joins us. Hi, Nikhil. Good afternoon. Good to see you in. It's been a while since we spoke. What's your take on the index? At around 21,700. There was good reason for you to go ahead and buy because risk reward seems favorable. Now we're around that midway mark at around the 24,000 odd mark. What do you think? Will it be a slow grind up from here on, or do you think there's a possibility we go ahead and test the recent low?
So, good afternoon, Nigel, and thanks for having me on the show. So the last time we had spoken, Nigel, we were very positive on the markets because the risk reward seemed extremely attractive from those points, and we were expecting a 17-18% upside on Nifty. However, after the 10% move that we have seen from the lows, two things have happened. One, if you look at it, the initial part of the earnings season have actually seen some sort of earnings come cut through. So especially in the case of IT stocks, if you look at it, there have been 3 to 4% earnings cut on the large cap IT names. And to that extent, therefore, the consensus estimate for FY27 earnings, which was closer to 1330, 1340, is now down to 1310. And therefore, our view is from here on, we probably have a single digit upside on the markets. But then you have to also keep in mind that India could be a big beneficiary of flows in the near term. So when Mr. Trump got elected and came as the president, there was a trend of dollar hardening and a lot of money shifted to US. Now we are seeing the reverse playing out. Dollar index has moved from 109 odd levels to 100 now. And because of this, there can be a trend where money starts to move out of US and get back into emerging markets. And therefore, there is some sort of push and pull between earnings and flows, if you ask me. My base case is that we will consolidate in this band of 23,800 to 24,800 for some time. And then as things pan out, we probably break out on the upside.
So, Nikhil, how would you construct your portfolio now? What are the structural overweights? What are the tactical overweights? What are the sectors that you think will go through a little bit of pain, at least, while we consolidate?
So, good afternoon, Rima. My sense is, Rima, pharma is something that we should look up from these levels. The sector had got derated because there was this tariff issue that was there for the sector. But given the fact that India exports almost 50% of the generic requirements of US, my sense is we should not have significant tariffs that will come on pharma, and valuations still look pretty palatable for that sector. So that's one sector that we are positive on. In the case of IT, I would say, in the near term, stocks may consolidate a bit. But if you look at and go and analyze the period of COVID, because the uncertainty at that point also was extremely high, we found a very interesting fact that even in that year, the dollar revenues of companies did not degrow or degrew for a very small amount. So, Q1, Q2 for FY21 had declines in revenues. But then as you moved into Q3 and Q4, even though they are seasonally weak furlough quarters, we saw very strong growth in those quarters. My sense is history could repeat this time around. We will have some sort of softness when companies report earnings for Q2 as well. And then Q3, Q4 could start looking a bit strong for IT companies. The point is valuations have come down meaningfully for a large number of IT companies. And on an absolute basis, because there is no balance sheet damage per se in these stocks and sectors, they may not go down much. They may time consolidate for some time. And then we will see sort of up move coming back in these stocks. Tactically, one of the sectors where we feel this quarter could be the bottom of earnings is probably the MFI sectors. The initial commentary from a lot of names also, if you hear, RBL Bank also, if you see, even though numbers were not great, the stock did have a decent move today. Because this quarter looks like the bottom for most of the MFI names, and things should improve substantially as we move in the second half of the year. So that's a tactical overweight for us.
Okay, all right, got that. Nikhil, just hold on to that thought. We have some very, very important flashes that are coming up for you on the screen. And I think you should keep an eye out there. The DFS secretary has assured that life insurance industry on no action against bank assurance channel. Now, this is a very, very important news flow that's coming in there. And I think the most important stock should be up for you on the screen. SBI Life and HDFC Life, because they had a fair bit of exposure to the bank insurance channel. So both those two should come in there. Yash will join in to give us further details. But as of now, there's, the DFS secretary has assured life insurance industry on no action against them. I think we'll have to wait for Yash to join in. But I think both these two stocks should be on your radar. I think, do we have Yash with us? All right, we'll try to get in. But this should be some kind of relief that's coming in. We'll try to get further details on that front. Nikhil, how are you placed on the insurance companies? Some of these companies have not given any returns. They didn't really participate in the up move, but how are you all placed on them, the insurers?
So we were a bit neutral, Nigel, on that sector, especially given the fact that when, the tax exemptions were taken away for investments amount beyond 5 lakh rupees, there was this concern that the APE growth will slow down for a lot of these companies. And we did see that trend panning out in the last 3-4 quarters where the growth for the sector had slowed down in that sense. But incrementally, I think, if all these concerns start to go away, growth can come back for the sector. And even if we have double-digit APE growth, given the fact that most of these names are trading at less than 2 times price to embedded value, there could be some upside in these names if these overhangs start to go away.
You liked oil marketing companies when we had spoken to you last time. Now, go ahead. And now what is the call on it?
So, Rima, if you actually look at the sector fundamentals from the last time we had spoken, it's actually improved. The last time we had spoken, Brent was closer to $70 to $73. As we speak now, it's closer to $65, $66, and we haven't seen any price cut happening on the petrol and diesel part. So in a sense, gross marketing margins, which were closer to 9-10 rupees the last time we spoke, those have actually now moved closer to 14-15 rupees. There has been 2 rupees of export duty that has come, but notwithstanding that fact, that will go to compensate the LPG losses that these guys are doing. And even if you look at GRMs, they are midway now. They aren't as high as $8-9, which they used to be, but they are still closer to $5. So a combination of these two things, one, GRMs are at decent levels, and second, marketing margins are way above what they used to be, should mean that as we move into the next quarter, because this quarter they will have some inventory losses and therefore reported numbers may not look good. But the next quarter should be very blockbuster for a lot of these companies. And stocks are still trading at closer to 5 times EV/EBITDA on an FY27 basis. So I still feel that there could be 15 to 20% upside more in these names as we go ahead.
Okay, all right. On the back of those, that news flash that's up for you on the screen, which sources are telling our colleague Yash, the stocks that are moving to the high point of the day are, SBI Life, and that's because SBI Life has got close to around 60% of its business from the bank assurance route. So that's the reason why that one has spiked up. HDFC Life, that as well has got around 65% from the bank assurance route. So that's the reason that one has spiked up. We have ICICI Pru, which has close to around 29% of its business from bank assurance. And Max Life, that's the other one in there with more than 50% coming in from the bank assurance route. So that explains why all these stocks are now moving to the high point of the day as we speak. I think Max as well should come up for you. Max, that one has spiked up. Yeah, at the bottom of your screen, you can see all the stocks that are reacting. Well, final question, Nikhil, before we let you go, we're going to be getting Ultratech's numbers in just a while. What I understand was that the con call was earlier scheduled, it's been pushed back by close to an hour or so. But what's your view on cement amidst all these trade tariffs that we're talking about? And if you're looking at a domestic play that's guarded from it, you're going to play the capex revival theme, then cement comes into play. And also the price action for April has been fairly encouraging. Your view on cement?
Structurally, if you look at the sector, Nigel, the good thing that is happening is it's getting consolidated into 2-3 players. So we now have Ultratech with close to 200 million ton capacity. We have the Adani Group with another 150 million ton capacity. And then we have the likes of Shree, JK Cement. So my sense is, next 3-6 months, stocks can still consolidate. But if you ask me 12-15 down the lines, we are more seeing a telecom-like scenario in this sector where the pricing power will be extremely strong in the hands of the top 2-3 guys. And then, my sense is 1,000 rupees of EBITDA per ton becomes the floor for a lot of these companies. And we are potentially then looking at companies starting to do 1,300 to 1,400 rupees of EBITDA per ton on a sustained basis. And once that sort of volatility goes out in terms of the profitability and we have more steadier EBITDA per ton getting reported from these companies, the EV EBITDA multiples for these companies should start to re-rate. So with a 12 to 24 month outlook, I think the sector holds a lot of promise and any weakness in the sector should be looked to be bought into.
Got it. Okay, all right, Nikhil, we appreciate you joining in. And, we take note of the fact that last time around you were sounding reasonably optimistic on the markets, and it worked in that favor as well. Look forward to chatting up with you rather soon. For the time being, let's slip into a short break. As we do that, well, here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18, the all-new app. Get instant access to breaking news, in-depth articles, as well as financial world updates. All of this at your fingertips. Just download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can simply scan the QR code that's up for you on the screen. Welcome back. Well, we have Ultratech's numbers that are flashing for you on the screen. On the top line, that appears it's a little bit lower than what we were working with, couple of percent points lower out there. But I think we have the EBITDA number as well that should come up for you on the screen. The EBITDA number more or less in line, so I think it's around 1.5% to around 2% miss on the top line. That's further flown down to the EBITDA number. The street was a little bit cautious because they have a couple of assets now that have got consolidated within the entity. But for the time being, it appears it's not dragged profitability by a great deal. We'll have to wait by to see further commentary in terms of what the management has to say on the path ahead, as well as how is their debt book looking. I think we have the commentary that's to the bottom of the screen. The volume number should come up for you. Just a minute, just trying to pull out that number. Consolidated sales volume during the quarter was around 41 million tons, which is a growth of close to around 17%. And excluding the acquired assets, the EBITDA per ton actually has come in at around 1,270 rupees per ton, because some of those assets that they've acquired, well, they'll still take time to come up to speed with regard to what Ultratech is doing. So a 17% growth actually is a good number. That's something that the street was working with. Volumes, no worries on that front. On the profitability, they're saying that the energy costs have come down by close to around 14% on a year-on-year basis because of the decrease in fuel cost, which was at around 881 rupees per ton in Q4. That compares with more than 1,000 rupees in the same quarter last year. Utilization levels were around 89%. So volumes have been fairly good. Utilization levels as well have been fairly good on that front. They're saying that the expansion schedule is moving as of plan. And as of the ongoing capacity expansion, they have commissioned close to 17.4 million tons or thereabouts. So I think we have most of those flashes. I'm just trying to look forward to the management commentary. All right, that's the commentary that's coming in now. Given the government's focus on infrastructure as well as housing projects, along with the increased rural as well as urban demand, they're looking at a sustainable volume growth of around 7 to around 8%. While the sector may see some short-term challenges, they continue to say that the long term looks pretty much in step. So just to sum these numbers up for you, close to 2% miss on the top line. That's flown down to the EBITDA, in absolute terms. But the management says that X of all these acquired assets, it's still holding at around 1,270 rupees per ton. And they've got the benefit of lower power and fuel cost in the past quarter. So these numbers go in as more or less in line with what the street was working with. And the management commentary as well is fairly optimistic on the way ahead. To help us out with a quick analysis, we have Jyoti Gupta of Nirmal Bang who joins us on the phone line. Hi, Jyoti. Good afternoon. Good to see you in. Tell us, what is your first take? These numbers appear pretty much in line with what we're working with.
Thank you, Nigel, for having me on the show. Yes, they are. Actually, I'd anticipated like a 7% YOY growth, and my Q&Q was slightly higher. And EBITDA was something like a 4,500, which I'd anticipated with 1,222 as the EBITDA per ton. I think more or less some minor variation, but I think it was anticipated primarily because the plants in the north, which got a bit of an advantage from realization of almost like 160 to 180. I think more or less the numbers. And in fact, Q1 should be even better for the industry as well as Ultratech as well.
Okay, so you're satisfied with these numbers. What else will you be looking forward to in the con call that I believe has been postponed by an hour now? So you got a later evening, Jyoti. But what are the key aspects you're going to be looking forward to?
I would actually be looking at more at the expansion plans and moreover and on the realization per tons, the price increases, because that's the only thing. I mean, you don't have much benefits coming from cost going forward. And of course, the petcoke prices which have increased in the fourth quarter, that reversal should happen in FY26. So which means the benefit of petcoke which we got of 4 paisa in fourth quarter, that should reverse in the FY26. So obviously should be some increase in cost as well from their side. So I look more in towards the pricing, how the price is going to look out, the market share, and overall how the volumes are going to pan out. Because FY25 we had more or less like 291 days. This year we should have roughly like 321 days, unless we have more severe rains. So overall the growth, volume growth should be 7% plus for this year, and therefore a good year for the overall industry.
Okay, all right, Jyoti, we'll let you go at that. Thanks a lot for joining in and giving us all those details. One more detail that should come up for you on the screen. They've recommended a dividend of around 75 rupees and 50 paise, which is a fairly decent number. Not a big mover for the stock, but some additional dividend is what they've given out. And the debt as of now has spiked up because of the acquisitions that they've done and the capex that they're incurring as well. But remember, the company is throwing up a lot of cash. So we have seen in the past that the debt number is normally kept under control once these assets keep throwing up cash. So at the last reported number that I can see that they have filed, the consolidated number is around 17,667 crore rupees, which is sharply higher on a year-on-year basis. But, the street was bracing for a higher debt number as well. We'll have to watch out for the capex plan and the debt reduction plan for the remainder of this year as well. So that's about Ultratech for the time being. The stock is down close to around, I think, 1.5% or thereabouts. But the numbers more or less in line with a small miss actually on the top line. Well, let's go across to Nimesh, who's here to tell us about D Street Chatter. Nimesh, tell us what you're picking up.
Hi, Nigel. A good recovery in today's market, largely led by large cap names, including Reliance Industries. What we saw on Friday was more of a selling from HNIs, super HNIs, and a bit of unwinding of longs as well. But the institutional flow seems to be quite positive. Even in today's trade, the buys is towards positive. And sectors which are well bid includes banks, PSUs, and the defense stocks. So these are the three sectors where there is institutional flow on the buy side. Having said that, earnings and the geopolitical risk, which is still not out of the way, that's going to be a key dominant factor, at least in the near term. So that's something to watch out for. And I guess for a bit of geopolitical risk, some larger HNIs are actually raising cash levels and are trimming positions. So while institutional flow is positive, there is a bit of selling happening from the larger influential investors. While everything is good on the downside, watch out for 23,800 as a very strong support now on the downside. So that's a level to watch. But from an institutional activity point of view, the buying continues, and especially in the large cap names.
Okay, watch for 23,800 on the way down. Buying continues in large caps. What about individual stocks? What chatter have you picked up, Nimesh?
Hi, Rima. So the first stock in my list today is SpiceJet. That's been buzzing the last couple of days. The volumes have picked up. I understand there are very strong buy flows from larger HNIs in the last many days. And now there is a very strong buzz or an indication that the company is likely to raise funds via preferential issue, and some big names may come in the preferential. So that's the buzz as far as SpiceJet is concerned. The second stock, a couple of names where there is delivery-based buying, Bandhan Bank as well as in GMR Airports. GMR Airports lost 4% on Friday and has recovered most of the losses today. Bandhan Bank is still down, but there is buying, is what I understand, from large institutions into private banks, and Bandhan stands out today as far as flows are concerned. The third name is Hyundai Motors. Like what we were seeing in Maruti, There is selling pressure in Hyundai as well for the last many days. And I understand a large long-only fund has been an active seller in the last couple of days. So that's Hyundai Motors. And the last one is KPIT Tech. The earnings are today, so that's something to watch out for. But I understand there are block offers in KPIT Tech from large institutions today. But do remember, most of the ER&D companies, after the disappointing numbers, have actually bounced on the higher. So need to see what KPIT delivers. But there are block offers from large institutions in today's market.
Got that. Nimesh, KPIT numbers were just out a while back.
Oh, I missed that.
Yeah, so Q4 was actually very strong. But just to inform you, they haven't given an FY26 guidance.
Okay.
So they've abstained from talking about putting a number to what FY26 will look like. But Q4 was strong, 3% top line growth. Order book picked up by, I think, about 18-19% on a quarter-on-quarter basis. Stock is holding up with a gain of about 1%, but it's a stock which has lost 35% from its 52-week high, which was a level above 1900. But conference call is at 5:30 p.m. today, so that's going to be very, very crucial to track. Mitesh is now back with us for a few last trades for BTST. Mitesh?
I have BTST on AU Bank and UPL. AU Bank, I would recommend a BTST with a stop at 683 for targets of 700, while UPL, again a BTST here. We'll keep a tight stop around 672 and a target of 688.
Got that. Let's move on and talk about the flashes which you could see on your screen, because it could be a major relief for life insurers. Sources tell CNBC-TV18 that the government may not take action against life insurers over the use of bank assurance channel. Yash joins in with the details he's picked up. Yash.
Well, Rima, this has been one issue which has been, scaring the industry, if I could say that, because bank assurance to a large list of listed companies contributes majorly in terms of the entire sales which they get. Now, what we've been given to understand is that just last week, life insurance CEOs had a meeting with Department of Financial Services Secretary M. Nagaraju. Of course, various things were discussed in the meeting. The company made presentations on how the persistency for the sector has been very strong, how the mis-selling numbers have been close to negligible, how the industry has emerged as a major contributor when it comes to government securities. But one big takeaway, according to our sources, that emerged out of this meeting is that the Department of Financial Services Secretary M. Nagaraju has indicated that there won't be any action when it comes to restrictions on the bank assurance channel. What we've been given to understand from our sources is that the Secretary acknowledged how bank assurance going forward will be a very, very big and an important channel when it comes to taking insurance to every household, life insurance to every household, and hence the growth in the bank assurance channel is also very important. As I said, the industry had also presented how the cases of mis-selling are near negligible, and this was the remark which was also made by the Secretary, saying that as long as these numbers do not swell up with the increase or the expansion of the bank assurance channel, then the government would not have any problem with an important channel like the bank assurance. As I said, the regulator had indicated in the past that they wanted to restrict bank assurance channel, restrict concentration of business through one channel. They would ideally want 50% of the total distribution to come from bank assurance. But with the assurance coming from the government and the acknowledgement how big this channel can be, provided that the cases of mis-selling remain restricted, it is going to be a big, big relief for the life insurance industry.
Well, Yashin, if I remember correctly, the ones that got hit the hardest were the likes of SBI Life, Max, as well as HDFC Life, right? So I think that's why we're seeing a bigger fill-up on those. If you could help us out, if you have some numbers off the cuff, I think 50 to 60% is from the bank assurance route. Is that correct?
Well, that's correct. For HDFC Life, SBI Life and Max Life, starting with highest being SBI Life, after that, Axis Max Life, and then HDFC Life get significant contribution from their bank assurance channel. And of course, these guys also have their parent banks as the major, bank assurance partner. For SBI Life, it's State Bank of India, HDFC Life, HDFC Bank, and Axis Max Life, Axis Bank as the major bank assurance partner. So of course, in that order, this is a big relief for all these companies.
Okay, all right, Yash. Thanks a lot for that. Let's get in Sudeep Bandyopadhyay, Group Chairman of IndiTrade Capital, who joins us. Hi, Sudeep. Good afternoon. Good to see you, Ben. Any view on these insurance companies? As Yash says, there's a relief that's come in there. Earlier, there was a fear that they're going to be restricted on the bank assurance front. But that seems to have some kind of leeway has been given. Your view on the stocks?
Good afternoon, Nigel. I think it's definitely fantastic news for these three companies, particularly which you highlighted. SBI Life gets a significant part of their business from bank assurance channel through SBI. Same is the case for HDFC Life and Max, which gets it through Axis Bank. So this, kind of news is a big relief for these companies because building, agency channel requires quite a lot of time and effort, and would have been extremely difficult for these companies to keep up the momentum, assuming there were some restrictions on bank assurance channel. So yes, big relief, and obviously market is giving a thumbs up as far as these stocks are concerned post this announcement. Of course, overall we are positive on insurance, and we do like these companies as well as LIC.
Okay, all right. Sudeep, just stay with us for a bit. Let's get to another story. Sources are telling CNBC-TV18 that the government may allow the Chinese companies to apply for the electronic components PLI scheme. Ashmit joins us to tell us what's the proposal and what's the news piece out there. Ashmit?
Well, an important development, this, especially given as how a large part of the global value chain, especially for components, rests in China. So we understand that the government has taken a decision to allow Chinese companies to partake as a part of the electronics component PLI. However, there are a number of caveats that need to be borne in mind. Chinese companies cannot come by themselves. The caveat has been spelled out very clearly by the government that the only manner in which Chinese companies can partake in this electronics component life cycle is to basically come via a JV route. They have to form a joint venture with an Indian entity. That's point number one. The second aspect is the management and control of the joint venture will have to necessarily rest with the Indian entity. So there has to be a stake of more than 51% or more as far as the Indian entity enjoys as a part of this joint venture. As far as what the Chinese shareholding could be, well, that's again an important caveat to be borne in mind. For certain specific critical components, the shareholding for Chinese entities may be allowed to go up to as high as 49%. But for the other components, the shareholding of Chinese entities could be capped at no more than 26% or 10%. These are various slabs that the Chinese companies, depending on the component, will have to work with. The other aspect which is critical is that there necessarily has to be a transfer of technology aspect. This is something that the government is very clear on, that any joint venture participation, subject to all the shareholding norms, subject to all the management and control norms, there will also need to be a transfer of technology. And fourth and finally, any investments that is being proposed by such a joint venture formed with a Chinese entity, the approval for that, the investment approval for that will not come via the automatic route. It will not be automatic. There will be approval. There will, on a case-to-case basis, the government will exercise discretion, and that approval for that FDI will have to come in via the press note 3, which was released by the DPIIT. So there will be scrutiny leveled on these entities, the way they're coming in, what the structure of the holding is, what is the nature of the transfer of technology, and only after that will the government allow for these JVs to proceed. But nonetheless, an important in-principle call being taken by the government that to encourage the local electronics component ecosystem, there is some participation that is felt is required from the Chinese counterparts. Back to you.
Okay, Ashmit, thank you very much for that. That's a big story, but lots of riders in place, so China will get a leg in. And we'll have to now wait by. I'm sure there'll be a lot of joint venture, JVs, partnership, alliances, announcements that we'll get. But this is an important story with lots of implications for India's growing electronic manufacturing space. Get into a break. On the other side, we'll get a chat more on the markets. Welcome back. Counting down to the close of what's been a very strong Monday, Monday's trading action. Reliance Industries has led the way, up nearly 5%. But TVS Motors is the other one you need to watch. Stock is spiking as the company has beaten street expectations. EBITDA margins at 14% is ahead of street expectations of about 11.5%. The stock is spiking, now up more than 3%. The CNBC-TV18 poll was 13.3% versus that. TVS Motors margins have come in at 14%. Bottom line has seen a surge of 75%. So margin beat and bottom line has surged for the company, and the top line growth also looks very strong, 17% up in terms of revenues and 9,550 crores. So TVS Motors clearly has been a big mover, and it's outperformed many of its peers, in terms of performance and even in terms of a stock price. The stock in the last 1 year is up close to about 40%. Bajaj Auto in the last 1 year is down nearly 10%. And Hero MotoCorp in the last 1 year is down 12%. So TVS Motors has stolen a march over some of its peers. So TVS Motors and Q4 numbers have been pretty strong. We'll await finer details on it, but prima facie looks good. But the other one, and this is the big deal actually in the automotive space, because M&M is all set to acquire a near 59% stake in SML Isuzu for 555 crore rupees, which will strengthen its position in trucks and buses. Sudarshan is here with the finer details. Sudarshan.
M&M is high in today's trade, and SML Isuzu, if you see, it's down more than 10%, or currently down 10% trade. And the reason, M&M has announced acquisition and also is going to make the open offer, and open offer price is at a 12% discount to Friday's closing price. So M&M is going to acquire nearly 44% stake from promoter, that is Sumitomo Corporation, and 15% stake from public shareholder, that is Isuzu Motors. And this total stake would worth rupees 555 crore, or say 59% stake. And apart from this, M&M is also going to come out with an open offer to acquire additional 26% stake, and for this price is fixed at rupees 1,555 per share. This is an all-cash deal, and deal is expected to be completed by December 2025. So what was the objective of M&M going ahead and acquiring SML Isuzu? To expand its truck and commercial vehicle business. So in the segment of more than 3.5 ton commercial vehicle, currently M&M's market share is 3%. Post the acquisition of SML Isuzu, its market share will increase to 6%, and by FY31, it's targeting the market share to increase to in the range of 10 to 12%, and by FY36, market share should increase to more than 20%. So this was the objective, and in the last 3 years also, SML Isuzu's turnover has increased from more than rupees 900 crore to currently around rupees 2200 crore. So overall, it's very positive for M&M, and that's the reason stock is higher. But considering the open offer price, a discount of 12% to Friday's closing price, you are seeing a sharp downtick in SML Isuzu. Also, till Friday, SML Isuzu was almost 26% higher in 2025.
Thank you very much for that, Sudeep. M&M seems to be ticking all the boxes with this acquisition. Your thoughts on M&M? And if you just want to quickly add a word on TVS, I know numbers are just out.
As far as M&M is concerned, it's been our favorite four-wheeler stock. In fact, we have been preferring it over all other stocks. Tractor business is doing very well. SUV, of course, we know the story. They're doing very well, and this acquisition fits perfectly well with the way they are moving ahead. The price they're paying also is decent. I won't say they're overpaying. I think this should strengthen their automobile business even further. So I think it's all good as far as M&M is concerned. From a long-term investor's point of view, continue holding. If you want to buy for long-term, please buy even now. Absolutely no problem. As far as TVS Motor is concerned, I think fantastic set of numbers. The margin is definitely a beat, and it augurs well as far as margin is concerned. But I would be a bit cautious because the valuation is a little rich. If you compare with Bajaj, Hero, and other two-wheeler manufacturers, I think the multiple at which TVS is quoting is significantly higher. So I don't recommend a buy at this level, but definitely good set of numbers.
Okay, all right. I think for TVS Motors, what the street likes is the positive margins. But I just need to note that there could be an element of PLI as well. And that explains why actually the margins have come in relatively better. So we'll try to put that up for you on the screen. But that beat may not be as much as expected, because there could be a positive impact of around 100 basis points owing to that PLI benefit. So stripped of that, actually, the margins could appear pretty much in line. So the stock initially did run away, But now it's come off from the top. So just keep an eye out on TVS Motors from being up close to 2.5%. It's come off a little bit because there could be an element of PLI that's accounted for in this past quarter, which is bumping up the margin. So wait by on that front as well. But Sudeep, we request you to stay with us. We'll just wrap down the markets and then we'll look forward to having a chat with you on markets forward as well. The other stock I want to pull up is Ultratech Cement. Just pull up the intraday chart actually. If we could see, the stock initially did see a bit of a knee-jerk reaction, but then in fact it did recover some of those losses. So Ultratech Cement is still down close to around 0.8%, but it was down close to around 2% or thereabouts. It was a day that belonged to the big boy Reliance Industries. That one led the way. A contribution chart will tell you Reliance Industries and the banking names. That's what accounted for almost all of the gains in today's trade. And the important point is the Nifty Bank today made a higher high after the last few trading sessions. A couple of global facing themes as well. You had Sun Pharma, JSW Steel, as well as Tata Steel. They went home with gains. And Mahindra & Mahindra as well as SML Isuzu, both of them did they did that big deal over the weekend. The street likes it for Mahindra & Mahindra because they'll gain market share. But for SML Isuzu, it seems shareholders wanted a higher price. So that got slammed 10% out.
Indeed, the open offer price is disappointed, especially given the way the stock ran up in anticipation of this deal. Let's talk about the mid-cap action. Very strong mid-cap index going home and closing with a gain of 1.6%. Good advanced decline ratio. Not a roaring advanced decline ratio, but about 1,400 stocks advancing to 1,200 declining. Okay, quick word on the gainers. RBL Bank, DCB, both up close to about 9 to 10%. Defense shipbuilding stocks had a field day. Garden Reach Shipbuilders up nearly 8%. We spoke about BEL in the frontline pack. So defense is a pack. If you have to look at the sectoral gainers, it was largely defense. Other than that, you had, IGL deserves mention. So that was up nearly 4%. Sonata Software won a deal. I think a little more than $70 million. Its second largest deal win ever, and that stock was higher in trade. On the way down, L&T Finance weak, M&M Financial weak, and Tejas Networks, 13% gone on Tejas Networks, and even Ramkrishna Forging, where there are some discrepancies, so the street doesn't like it. That brings us to a close on Monday's trade. The Nifty closes above 24,300, a gain of 1.2%. Don't go anywhere. We're going to just get into a short break. We'll wrap closing bell, but we'll come back with markets forward.